Hello, in this presentation we will set up vendors and vendor balances into QuickBooks Online. We will have a comprehensive QuickBooks Online course soon, if not available yet. We also have a comprehensive Excel course which complements the QuickBooks courses and a QuickBooks Pro desktop version course you can find at the link below. Here we are on the QuickBooks dashboard. We are in the Get Great Guitars problem. We will be continuing with the entering of vendors. In order to enter the vendors, you want to make sure that we have this window open here. So we want to click on that window to have that open. Vendors are who we pay. Therefore, they will be in this tab, the Expenses tab. So we select that tab. We're going to go to the second item up top, the second tab up top, which will be the vendors. Scrolling down, we have the add vendor and we have the import file. If we have a lot of vendors we need to import, then we can use the import. We're just going to add the vendors as we go for this item. It's going to be very similar, of course, to the customers when we added the customers in a prior presentation. This time we only have the one vendor, so we're going to use the add vendor function here. We then have the data input screen. Now there's going to be a lot of information. We have the title, we've got the first name, last name, suffix, and all this would be great information. The minimum we need is going to be the vendor name so that we can track any balances that are still outstanding at this point. We're going to put in the name of Epiphone as our vendor name. We'll just tab through some of these sections. We got the display name will be the same. We're going to have the address. Again, good information to put in place. We're not going to put it in place here. We're just going to have the minimum of the name in order to record the accounts payable. Phone number, fax, other, website, billing, terms, opening balance. This is something that we do want to have input. We're going to say that we owe Epiphone, in this case, $15,000. So that will be the opening balance. We're going to have our problem as of the start date of January 1st, 2021. Therefore, we're going to put the opening balances in as of the day before that date. So we're going to say 12/31/20. 12/31/20. That's going to be the day before we start entering the data into this particular problem. And that will be it. We're going to save that. And that should save our vendor. Here's our vendor. Here's our opening balance. Note it shows the $15,000 that will be going into accounts payable, and in order to make that work, QuickBooks will have to have some other side to that journal entry as well. Let's take a look at some reports in order to see how that works. Reports over here on the left-hand side, we're going to select reports. Then we're going to type in first the balance sheet, and note it's going to be in order of the reports. We're going to go to the balance sheet. And then we're going to change the dates. Dates are going to be, let's put 12/31/20 to 12/31/20. So December 31st, 2020 to December 31st, 2020. We will then go ahead and run that report. And we see our accounts receivable from the prior presentation. We have the $15,000 here in accounts payable under, of course, the liabilities section. Now we're still in balance here because QuickBooks put the $15,000 in and must have done something somewhere else, most likely putting it into some way the net income. So we have this net income. That's not really where we want it, but it will work, and we'll see why in a second. If we select this $15,000 in accounts payable, we see this item here. Now note that QuickBooks creates a bill even though we didn't really enter a bill. All we did was enter the opening balance. QuickBooks will assume, given the fact that it is a vendor, that it will be a bill that has been generated. So that's going to be okay as long as it was made prior to the month that we actually start doing work. And so we're going to go back to the report here. Then, well, let's look at the dates of the next day, so the next year, January 1st, 2021. Note, I'm just hitting the plus button in order to get one day later, so it's at 12/31/2020. The plus button takes us to January 1st, 2021, and then we got to run the report once again. So then if we scroll back down, note that it moved the net income to the retained earnings. That, in essence, is what we want because we want to have nothing in net income as of the days that we're going to start to input the data. net income summarizing and representing the income statement or profit and loss. So let's take a look at the income statement or profit and loss and see that in more detail. So we're going to go to the reports over here, left-hand side, reports, selecting the reports. We're going to type in profit and loss, which is QuickBooks income statement, and scroll up to the profit and loss. Within the profit and loss, we'll do the same thing. We're going to have this as of 12/31/20, 12/31/20. We will run that report. And here we have the revenue from the prior presentation, and then they put net income here. Note we didn't put anything in terms of invoices or bills in. All we did was put those opening balances in, and QuickBooks made up this account other miscellaneous expenses. So that's obviously not an account we really want to see. However, it will roll out to retained earnings as of the first day of the next month, and therefore shouldn't be a problem. If we click on this item here, we'll see that once again will be the bill that we had. So we're going to go back. I'm going to go back to the report, and let's see what this report looks like as of the first day that we're going to be operating, which will be January 1st, 2020. I'm going to select the plus arrow, tab, plus arrow, and run the report. So here we have no activity, of course, and that's because they're all temporary accounts on the profit and loss or income statement, and we don't have any income and expense as of the first day of the next year. That's what we want. That's where we want to start. So we're going to go back to the reports and get the vendor balance report. So I'm going to type out vendor balance. Let's do the summary report, vendor balance summary report. And we'll go ahead and export this report to Excel. So there's only this one activity here, so we're going to go ahead and export that. In order to do that, we're going to select this item here and go to the Excel, export to Excel, and it will generate that report for us. We will go ahead and enable the editing, and here is our report. It saves the tab, nicely tabbed, looks formatted well, so we're going to go ahead and go File and Save As and place this where we would like to have it in our documents. Here's where we'll place the file. I'm going to name the file Section 6 and Get Great Guitars, and we'll keep it there with the vendor balance. So we will save that, and that will be the vendor balance.